Right friends, welcome back to Banking Awareness Current Affairs Q&A discussion. This is second session and two students raised some doubts yesterday, or you can say critically they commented. I invite such critical comments. The first comment is with regard to economy and economic survey. In fact, economy and economic survey we will complete positively before civil services preliminary, as I have already committed. Policies and programs, economic survey as well as economy I committed and we are committed to complete it, that is one part. And policies and programs, already 9 modules are available in Learning Space Digital and another 4 to 5 modules which will complete most of the policies and programs. They will be presented within next 3-4 days. So, with that policies and programs will be over. Immediately parallelly every week we are going to upload this economic survey as well as economy from next week. So, please leave that. Then second point is, this lecture is basically intended for various banking examinations, though the students pertaining to other services they can also watch, there is nothing wrong, but this is basically intended for banking examinations. This 12:30 AM 12:30 in the afternoon, this lecture is meant for banking examinations and it may be useful for other examinations also, but here the focus is basically banking examinations. Third point is, one student commented on the questions yesterday what we have discussed were repetitive, which were discussed in recent times. You are true, we will try to take care that some new concepts are also inculcated here. Today I have taken some questions so that your thought process will improve. The first one is temporary insufficient liquidity. Temporary insufficient liquidity in the bank may lead to, here before going into the answer, insolvency means, insolvency is the state where an organization is about to collapse. It is not able to pay back whatever is owed to other organizations. So, if it is not able to pay back the debts, then that state is insolvency. If it is certified by some authorized authority, that is bankruptcy, then bank run is basically the answer here. Temporary insufficient liquidity. So, when you are going to the bank and in the bank you were told that money is not available, and sometimes there may be some rumors that bank money is not available. Under those circumstances people will go and queue in front of ATM. That situation is basically bank run, that is basically known as bank run. That means temporary insufficient liquidity may lead to bank run, not insolvency, not bankruptcy. Insolvency and bankruptcy are bigger terms, whereas bank run is a small term. Wholly owned subsidiary model is meant for, please do not forget this, wholly owned subsidiary model means when foreign banks want to establish their branch in our country, they have to follow wholly owned subsidiary model. Basically, you may have a doubt, what for purpose? The purpose of wholly owned subsidiary is to ring fence, to protect the business in India from their businesses in foreign countries. In foreign countries, if their bank collapses, that should not cause damage to the bank in our country. So, wholly owned subsidiary model is meant for foreign banks operating in India. Which of the following cannot be classified as liquid asset? Here, cash in your pocket, that is liquid asset. Deposit, basically savings deposits in bank account, liquid asset. Gold, liquid asset. Foreign currencies like dollar, euro, liquid assets. The meaning of liquid asset is you can get that money value without loss of value. If you want to convert it into cash, if you take gold, you can sell it at market value, anyone can purchase. So, The meaning of liquid asset is you can convert to the money value without loss of value of that particular instrument. Commercial building is here the answer. The other name for highly liquid assets, other name for highly liquid assets, liquid assets I told you, highly liquid assets other name is near money. We call highly liquid assets as near money, please do not forget, right. Then dear money, what is the meaning of dear money? Dear money means when the interest rate is high, suppose the interest rate is 12%, 13%, interest rate is increasing. Under those circumstances, if you borrow money, that is dear money, the money which you are getting at higher interest rates is classified as a dear money. And please do not forget soft loan. What is the meaning of soft loan? Soft loan means the loan you are getting at less than market interest rate. If the market interest rate is 10%, if you are getting it at 8%, you can call it a soft loan. So, this terminology please do not forget. What is the name given to the banking which facilitates mergers and acquisitions as well as corporate restructuring? When two companies wants to merge and when corporate restructuring is required, under those circumstances the companies approach investment bankers. So, the meaning is investment banking. Now, I will tell you around 7-8 points and their meanings. Please keep it in your mind. Retail banking, when I am taking car loan, when I am taking loan against mortgage of loan against pledging of gold, when I am taking loan by mortgaging my house. So, these loans are known as retail loans and that banking is known as retail banking. When Reliance Ambani is taking 1000 crores of loan from bank, that is corporate banking. When banks are investing in investments, or you can say when banks are investing in money market instruments or capital investments and they are investing in foreign exchange transactions, then that type of banking is treasury banking. So, these words do not forget. Investment banking is when companies are approaching the banks to give advice with regard to corporate restructuring, with regard to mergers and acquisitions and with regard to raising of loans from the public, that means debt instruments, with regard to equity instruments, issue of shares. If Reliance Industries wants to issue shares, he will approach somebody. When Reliance Industries wants to issue shares, he will approach some investment banker. So, investment banking is basically raising money by issue of shares, raising money by issue of bonds or debentures, at the same time mergers and acquisitions, corporate restructuring. For all such type of things, investment banking will come into picture, and at the same time sometimes they are also called merchant banking, please understand. And sometimes you come across portfolio management services or PMS. Portfolio management services means if I have 1 crore of rupees, if I give it to some firm to manage my investments, that is known as portfolio management services. So, these terms please do not forget. Which of the following is created to check frauds in lending against mortgages? I have big house, 10 crores of value, then I mortgage it to State Bank of India, then I will get at least 6 crores or 5 crores loan. Sometimes some frauds may take place. So, to look into the frauds against mortgaging lending, or you can say to look into the frauds against lending against mortgages, the organization associated with it is SERSAI. And please do not forget the CERSAI full form, please look into the full form of CERSAI. And another important point is CERSAI will maintain the central KYC database. Central KYC database will be maintained by CERSAI. Currency chests are technically under the control of Reserve Bank of India, though some bank maintains on behalf of Reserve Bank of India, but technically they are under the control of Reserve Bank of India. Next one is, there are several ways of investing money by the common man. I can invest money in several ways. If I have 1 lakh rupees, how to invest? There are several ways. Which of the following is considered to be the riskier investment in comparison to others? Fixed deposits in banks, one of the safest investment. You may get 7% interest, still it is the safest investment. Bonds issued by public sector undertakings like NTPC, Coal India Limited, BHEL. Yes, it is also safest investment, you can say. This bonds issued by PSUs and debentures issued by top rated companies. When top rated companies are issuing debentures, they also have some sort of safety, and here this you can say somewhat safe investment, but equity investments are risky in fact. Equity investments are basically risky. So, answer here is equity investments, that means investing in shares. And here you may have a question that which of the following reduce the risk by diversifying the investment? The answer is mutual fund, please do not forget. Ways and means advances. Ways and means advances are the temporary loans given by Reserve Bank of India to the state governments. Ways and means advances, that means when a state government is having problem in payment of salaries, in paying something, then Reserve Bank of India will give temporary loan to the state government, that is known as ways and means advances. They are temporary loans given by Reserve Bank of India to state governments. The responsibility for managing the currency in circulation. The responsibility for managing the currency in circulation is, the responsibility lies with Reserve Bank of India undoubtedly. The responsibility for managing the currency in circulation rests with Reserve Bank of India, and in fact it is required to give the total value of currency in circulation quite frequently at the designated time frame. RBI increased the ceiling under market stabilization scheme. Under market stabilization scheme, RBI increased the limit. What is the answer? What is market stabilization scheme? When excess liquidity is there in the market, then RBI by issuing bonds will suck that liquidity. That is also known as, you can say, surgery, you can say, just like surgical operation. So, by just like doing surgery, when excess liquidity is there, then under market stabilization scheme, by issuing the bonds, RBI will suck the liquidity, and this is to be maintained as a special account, and this is as per the agreement between Reserve Bank of India and Government of India in 2004, and recently this limit is increased to rupees 6 lakh crores. Next one is, small coin depots are under the administrative control of RBI. Basically, currency chests, small coin depots, and at the same time managing the currency in circulation. This is the responsibility of Reserve Bank of India. Sharia banking. Quite often we hear about Sharia banking. Sharia banking is in vogue in some Muslim majority countries. And which of the following describes Sharia banking? Here, interest is forbidden. Interest is not allowed as per Sharia banking, and prohibition of interest is a well established working principle. So, that is the principle of Sharia banking, right. CGT MSE. What is CGT MSE? Collateral Guarantee Fund Trust for micro and small enterprises. Please understand, this is for micro and small enterprises. For micro and small enterprises, this collateral is security is given by CGT MSE. When I am taking loan, I may give my house as mortgage, but for small enterprise, for micro enterprise, they may not have any property. So, that collateral is given by CGT MSE, it is maintained by SIDBI. Under credit guarantee scheme, whatever I have explained just now, the maximum limit for the coverage of the loan increased from rupees 1 crore to rupees 2 crore. This is very important. Under credit guarantee scheme, the maximum limit for the coverage of the loan increased from rupees 1 crore to rupees 2 crore. Recently, the Prime Minister announced the maximum collateral security can be given up to rupees 2 crore. Previously, it was 1 crore. GAR is going to be implemented from 1st April, already it is implemented. GAR stands for General Anti-Avoidance Rule. I will tell the meaning in one sentence. General Anti-Avoidance Rule, that means only for the sake of avoiding tax, if a company is establishing a shell company in foreign country, then it will look at that aspect. Only for the sake of avoiding tax, if any company is establishing another company in another country, right. So, if any company is establishing company in another country only for the sake of avoiding tax, that comes under General Anti-Avoidance Rule. Look at the following organizations: OECD, OECD headquarters, Paris, and India is not a member of OECD, please understand. Organization for Economic Cooperation and Development, the countries where capital markets are well developed, those countries are there in OECD. India is not member. FATF is Financial Action Task Force, and this is basically to prevent money laundering, and India is member of FATF. And TPP, India is not member, and RCEP, right. So, RCEP, India is member, still negotiations are going on. This is Regional Comprehensive Economic Partnership. 16 countries are there. Out of 16, 10 ASEAN countries, 6 partner countries of ASEAN. So, 16 countries are in RCEP, 12 countries are in TPP, and America recently decided to come out of TPP. FATF is Financial Action Task Force, India is member. So, here the answer is OECD and TPP, India is not a member, right. Partha Mukhopadhyay committee recently gave report on the issues related to, basically here Partha Mukhopadhyay committee, it gave report pertaining to migration. Nowadays, several people are migrating from one state to other state in search of employment, and basically it gave report to look at the difficulties faced by the migrants. This report, Partha Mukhopadhyay committee gave its report. An instrument which is passed freely, please read this, an instrument which is passed freely from one party to another almost in the same way as money. The instrument which is freely passed from one party to another almost in the same way as money is negotiable instrument. So, negotiable instrument, if someone says, please understand, you know, check is example of negotiable instrument, promissory note is example of negotiable instrument. The meaning of negotiable instrument is an instrument which is passed freely one party to another almost in the same way as money, that is negotiable instrument. Which of the following can be considered as part of fiscal policy? Here you see, you should have clear idea about monetary policy. Monetary policy is basically looking at this reducing the interest rates, or you can say reducing repo rate or increasing repo rate, At the same time, increasing or reducing CRR, SLR, and imposing limits on credit to banks by central banks. You cannot issue 50% more than, not more than 50% of gold value, something like that, if such restrictions are imposed. So, these are all part of monetary policy. And fiscal policy means increasing the personal income tax, increasing the taxes, increasing the government expenditure, reducing the taxes, reducing the government expenditure. These are part of fiscal policy, please understand. Which of the following may lead to cost push inflation? There are basically two types of inflation: cost push inflation, demand pull inflation. Demand pull inflation can take place when more money is in circulation, at the same time when spending is more by the government, when taxes are reduced, then more money people will spend. So, under those circumstances, demand pull inflation may take place, but cost push inflation takes place because when there is a scarcity of labor, scarcity of raw materials are not available, labor are not available. Under those circumstances, it may lead to cost push inflation. Then banks undertake operations like investments, money market transactions, foreign exchange transactions. These come under treasury operations, I have already told you. Which of the following can be termed as current assets? In economy, you come across two words: fixed assets, then current assets. What is the difference between fixed assets and current assets? This is very important term, please understand. Fixed assets means the assets which are fixed: land, buildings, machinery. So, they cannot be converted to cash value, they are locked up. So, they are basically used for producing something, they are fixed assets. Current assets means the assets which can be converted to cash value within 1 year are known as current assets. So, please understand the difference between fixed assets and current assets. Current assets are the assets which can be converted to cash value within 1 year period. I have computer manufacturing factory, I have manufactured computers, but I am yet to sell them. I have manufactured, I am yet to sell them, and these manufactured computers are current assets, right? Which of the following comes under unsecured lending? Home loans, secured lending. When they are giving a loan, my home will be there. Then mortgage loans, when they are giving loan, I am mortgaging my property. Gold loan, when they are giving loan, I am pledging my gold. I am pledging. Please understand the difference between pledge and mortgage. For land and buildings, you use mortgage, and for gold, we use pledge. So, by pledging my gold, I take loan, but unsecured lending is credit cards is unsecured lending. Credit cards is unsecured lending. Personal loans is unsecured lending. Please understand, please remember in your mind, this credit cards and personal loans are examples of unsecured lending. Right friends, you learned something today, some new words, some new questions, new situations. I hope that you enjoyed today's lecture. Please do join tomorrow at 12:30. Have a nice day. Thank you.